In today's video, I am going to be breaking down what, in my opinion, are the top 5 ETFs for millennials to hold for basically forever. Let's get down and let's check these out. So the first ETF is the Global X S&P 500 Covered Call and Growth ETF, XYLG. Now, the idea behind this is, of course, we're getting higher dividends because of the covered call, but we are also looking for higher growth, which is very important. From there, obviously, Yahoo is showing NA for yield. If you go to their actual website, it's around 4.5% yield. And with that, you can reinvest that 4.5% back into the ETF, which I would do if you're younger. Or you can use my strategy, which is you take those dividends and then you reinvest it in something totally different, because then you can stay even more diversified. And of course, diversification is very important. The only thing is the average volume isn't huge. So if you're looking at buying 3, 4, or even 5,000 shares, it may be difficult to get in and out of it. It's also not a very old ETF. It's fairly new, and we did see that it did start back in October of last year, and it started roughly around $26 per share. It is now sitting at $30 per share, so it's got about a 15% increase year over year, which is fantastic. Obviously, this past year has been really good for everybody anyways, but at 15%, that's pretty strong. And you're getting that 4.5% increase, or that 4.5% dividend, which brings you around that 20% every year, or at least for the first year. You can also check out that they do pay every single month as well when it comes to the dividends. So it's actually a very interesting ETF if you wanted to convert later on, maybe 10, 20, 30 years from now, into having that dividend paid out to you, and you can use it as income instead of reinvesting it. This is a very good strategy because then at least you're getting paid every single month. Its top 10 holdings is actually about 28% of the entire ETF, which is pretty high if you're looking for diversification. But if you're looking for, of course, just that growth and dividend, you're still looking at some very amazing companies. The only one I'm kind of leery of is Facebook. Who knows what's going to happen with that business into the future? It could grow huge, or it could get a lot of bad backlash. But either way, Apple is a very strong company, same as Microsoft and Amazon. Amazon is obviously the future. Alphabet, obviously, they pay me a good amount of money to make videos. And then, of course, Berkshire Hathaway, Tesla, which I'm a massive bull on, and Nvidia, which I'm also a massive bull on as well. Next is the Global X NASDAQ 100 Covered Call and Growth. Same idea. And basically, it's the NASDAQ instead of the S&P 500. This one actually has higher volume. And something else that's very interesting is it does also pay roughly a 4.5 to 4 3/4 dividend, depending on essentially the day, to be honest with you. However, you are looking at a year-to-date return of 11% as well, which is pretty good. Now, both of these ETFs have a higher MER, which is how much you pay them essentially to be able to invest your money. They just take it out of whatever you have invested, but it's still not too bad considering that you're looking at ETFs that are gaining a lot more than what the MER is charging you. If you're looking at, of course, from where it started, which was about last September to about today, you're looking at a fairly modest increase, $27 to $31. That's not massive, but it's not too bad either. It's about a 15% increase since it started roughly. Obviously, I'm just rounding off numbers at this point, but it was up to $33 at one point. And of course, once this basically negativity on tech goes away, it's going to increase once more. You generally will find higher gains when it comes to the NASDAQ than the S&P 500 as well. This one also does pay every month as well, which is always good. Most covered call strategies will pay every single month. TXF, if you're Canadian, is a tech covered call as well. However, with TXF, it pays every quarter. And if you're in Canada, ZWT is another option too. And with that, it's another tech covered call. That one, however, does pay monthly. Now with this one, obviously you're looking at some of the biggest tech companies in literally the world. The only one I have negative thoughts about is, of course, Facebook. The rest of them are just absolutely amazing companies. Next is ARKG, which is actually a very interesting ETF. With ARKG, what you're looking at is the Genomic Revolution ETF, and with this one, it's very negative for the year, which, to be honest with you, is starting to get a really bad rap, especially with all of the other ARK ETFs being down. The reason is because they're more, I would say, 10-year out stocks, and recently, over the past year, there's been a lot of people investing in these stocks that these ARK ETFs hold, thinking that the technology that's 10 years away is going to happen today, and that's not how it happens. They've come back drastically, and I think it's roughly a good time to start getting into them. ARKG is going to have those CRISPR stocks, which we've all heard of, this mRNA vaccine. And from there, the CRISPR is kind of the next step. Instead of just changing your RNA, it's also going to be able to change your DNA so that eventually there's going to be like no cancers. And of course, we may be able to live longer and live forever. So that's interesting. This one does not really pay a dividend at all. Don't expect to be getting a dividend. However, it does have a higher MER, but you're hoping for higher gains. That's essentially why. And this is what I'm talking about. Over the past year, people thought that the technology was going to be out now. It never was going to be. That's why it's pulling back just slightly, but it's starting to level off, as we can see, and eventually it's going to start slowly trickling back up because, of course, there's going to be more and more pharmaceuticals coming from these companies, and because of that, we're going to be seeing some growth coming out slowly. It's a long-term ETF. As we can see, it don't expect a dividend, but it does pay roughly every year, and it pays a pretty substantial dividend once a year. It's just don't expect it. So the top 10 holdings of this one is Teladoc Health, Exact Sciences, Pacific Biosciences of California. Some of these are really small companies, or at least companies that you may not have heard of, especially if you're Canadian, but we've all heard of Regeneron, or at least we should have all heard of them. And of course, CRISPR is that big company that I talked about earlier. That's the one that I have a lot of faith in, and I just absolutely love that technology. I've spoke about this earlier on in the video. TXF, this is a covered call from Canada, and this covers a lot of the tech stocks in the United States, but it's a covered call, so higher dividends. Even though it's not showing a dividend here on Yahoo, it's a 10% dividend, or yield, I should say, is 10%. Over a 5-year period, it has these times of growth, these times of stagnation, trading sideways, and more times of growth. What you're basically looking at wanting to do is just waiting for a little bit of sideways trading action. That's a perfect time to get into it. As we can see here, it's just finished some sideways trading and it's starting to increase once again. This is from the actual TXF website, and 10%, as we can see there, is absolutely amazing. They will also sometimes do reinvested dividends as a bonus at the end of the year, so keep that in mind too, but they've only done that in 2016 and 17. This TXF is also a 0.71% MER, and what you're looking at is a top 10 investment is Applied Materials, Micron, Intel, Alphabet, Booking Holdings, Broadcom, Intuit, Microsoft, Nvidia, which is absolutely amazing, and then Texas Instruments, which is an amazing dividend stock on its own. And then if you wanted to get something like an ARKG and you're in Canada, this is a great option too. It's ZGen by BMO, and it's the same idea. They're going to be investing in those genome medical treatments, stuff like CRISPR, mRNA, things like that. Now the MER is 0.45, so it is a bit cheaper than ARKG. However, what you're looking at is distributions annually. They mention it annually. Expect to get at least a once per year dividend. And what you're getting, the benefits from this ETF is it's designed for investors looking for growth solutions. You're looking for basically mega trend or of the genomic innovation research. Instead of donating to cancer research, things like that, you can invest in stuff like this, and you're basically directly giving money to the companies that will be actually doing the research. Now, its top 10 holdings are not technically CRISPR stocks. However, Moderna is working on CRISPR technology and mRNA technology, same as Regeneron as well. Both of those companies are very heavily invested, or at least slowly investing more into CRISPR, but heavily invested in mRNA. And other companies like Bristol Myers are also investing in that same type of technology. Technically, they all are. Roche is also getting really big into CRISPR too, from what I've been reading. But if we go and expand the list, we can see that even 10x Genomics is on there. We're also seeing CRISPR, much smaller portion of the ETF is holding CRISPR. However, it comes down to this being Canadian and not as much taxes if you've got it outside of an RRSP if you're Canadian. It's also not been around for very long. It's pretty much even since January, which is when it started. I don't know if there's going to be a massive gain very soon, but this is something that you would look to hold for a good 10 to 15 years. CRISPR itself, that technology, is said to be at least a multi-billion-dollar industry by 2030. This is why I'm saying it's like a 10-year hold. There's going to be lots and lots of advancements in this technology over the next 10 years. A lot of the companies like CRISPR are starting to get through a lot of their clinical trials. And if you're trying to figure out what the heck is even CRISPR about, CRISPR is basically the ability to change your DNA so that you don't have cancers into the future. It's able to change your DNA strands so that there's basically anything possible. There's some really black hat doctors in China who have actively been experimenting with babies, being able to change their DNA so that they can be smarter. So there's a lot of crazy, weird, dark, black hat stuff happening in the field. But if you're investing in the companies like CRISPR, which are American based, then what you're looking at is not such that crazy stuff that's happening, but you're looking at more on the white hat, good stuff that is essentially looking to cure cancers and things like that. I hope that this video has helped you. If you're a millennial, if it has, hit that like button, subscribe, and I'll see you guys again next time.